Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Brent Cook of Exploration Insights. Brent, thanks for being with us.
Glad to be here again.
Industry expert on gold and gold stocks. Wanted to get your take on gold right now, what it's been doing and where you see it going.
I don't like to predict where gold's going. I let smarter people do that. That's what we're here for in New Orleans, is you've got all the macroeconomic thinkers and such. My view is that it's more likely to go up than down over the next few years, given what the debt situation, the global economic situation. So that's just my view. I think it'll be higher next year than this year at this time.
Well, announcement of QE3 and over 80 billion a month going back in. Yeah. Hey, that's a good call to make.
It's easy.
Yeah, it is. And what are you looking at right now? Like, there's a lot of stocks that are decimated. Is there a particular area, region, or metal that you're looking at?
What I'm really focused on is trying to identify a property that's high enough quality, meaning high enough margin, gold, silver, copper, whatever it is, but mostly gold, that is high enough margin that somebody's going to buy it. I'm looking for takeout candidates, and that's really all I shouldn't say mostly what I'm after, is that sort of thing. I'm invested in a few prospect generators and that, but I'm looking for big projects, big high potential projects, early stage discoveries.
And what's impressive is that you do get in on those early stage. So it's not like you're waiting until the company is at 100 million market cap and then saying, yes, this seems like it's going to work. It's fairly early on in the 5-10 million market cap range.
It's pretty high risk stuff. I mean, we're gambling a fair bit, but I think the odds of any prospect becoming an economic deposit are 1 in 1,000 to 1 in 10,000, depending on how big it is. But you can improve those odds really, really simple with some basic due diligence, people, share structure, how much cash they've got, and then look at the geology. And that's really where I focus. Once I get to that stage, is I can throw away half the projects that I look at just like that, recognizing that even if they're successful, what they're going to find is not worth the effort, really. I mean, if we're in this sector, we're in it for a big win, given the risk, right?
Right. And as a geologist, what are some of the key things you look at, the rules of thumb, in terms of looking at a deposit?
I think, depending on the type of deposit, when you look at the size of the system, the strength of the hydrothermal system that you're looking at. Over 5 billion years now, almost, the Earth has been changing. And as it changes, it creates anomalies. That's just what the Earth does, right? And so as economic or exploration geologists, they run out there exploring these geochemical anomalies in the hopes that at some point all the things come together to make something economic. So what I look for is the right setting and the right size of the system that we do have a chance at finding something economic and big.
And what are the tools you use for that, in terms of like geophysics, or you're looking at surface samples, or do you wait for drill
Everything. I might look, geology, alteration, geochemistry, soil samples, trenches. I'm happy to go into a property, a company that's only got some soil samples or trenches, or even if I go down there and walk it, I can see this is big and we've got a big upside here, potential.
Nice. And what are some of the companies that you're liking right now? Things that you've gone through the filter process and narrowed down 1 in 100 or 1 in 1,000 of these deals you've looked at?
Right now, I've been more focusing on companies where I'm. The key in this game to me is don't lose money. If you can avoid losing money, then you got a chance of winning. So I'm looking at things now, given how bad the market has been on these, where my downside is covered to some degree, and then I've got the upside. One of those companies would be Virginia Mines, which your downside is covered with the Eleanor deposit, and they've got a potential discovery in Quebec. So there's our upside. Another one we're looking at is something called Duluth Minerals in Minnesota, where they've got a major mining company, Antofagasta, drilling out and testing a large copper, nickel, platinum group system. That's all covered. And there's $100 million they're going to spend on that. What Duluth has is, of 100% of their own, is a potential massive sulfide deposit feeding into this that hasn't been drilled. So if they drill and hit that, there's our upside, but we're still covered on the downside. That's the sort of thing I think I like right now.
Now, I'll mention too, the companies that you talk about are always the companies that you own. So you own those two companies.
I do, yes. That's my letters about what I'm doing with my money, and that's what I own, and that's why I own it.
I don't own those two companies, just for full disclosure. But my question is, you mentioned cash and value, that the company has shares in another stock or someone else is spending money as a key thing right now to protect your downside value. Can you elaborate a little bit more on that, the various different valuation techniques that you use to underpin the value of the stock?
Well, with Virginia, it's easy. We've got a royalty that's going to be streaming 2.5% to 3% gold to them off of 600,000 ounces of production annually. So we can value that, and then we know what our upside, and then the upsides from there. Likewise with, that's another one now, Lydian. You know, we own Lydian, have for a long time, got in on that early, but there's a deposit with a feasibility study level a net present value in excess of $1 billion at $1,500 gold, and you can buy the company for under $250 million. Now, you know, it's in Armenia. People perceive that as risk. I don't see it as big risk at all. But there again, I think our downside is covered, and the upside is that we've got a deposit that it will be worth, you know, that much money, more or less.
Very wise investing strategy. You know, get in with companies where you get your downside risk covered, and your upside is what the company can do, but also what gold can do too.
I think really the key is don't lose money. And you know, that's impossible. I mean, some of these things are just big gambles, but that's the goal.
Yeah. Thanks very much, Brent, for being with us. Again, Brent Cook, Exploration Insights. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.